Hello dear crypto friends and welcome back. I feel a bit better today. I was sick yesterday. I'm still actually pretty sick. You might hear it in my voice, but I don't have brutally high fever anymore, which is quite good, I have to say. So I think I have the brain capability again to make some Bitcoin analysis. Yesterday I tried, but my brain didn't work. I was just talking complete gibberish. I tried to make a few recordings. It was a complete disaster. But I think today it should be okay, at least I hope. And today I would like to talk about the Bitcoin long-term logarithmic regression channel and Metcalfe's law, and when can we expect Bitcoin to hit $1 million? And I would like to start by trying to understand or trying to explain what the logarithmic regression channel actually is, where it comes from, how it is modeled, how we can understand it, and how we can use it to make predictions about future price development. You know, this model is already very old. When I started with Bitcoin in 2013, there were already these logarithmic regression channels circulating around. You know, this model is not new. I published my first charts on TradingView years ago using the logarithmic regression model. I can just show you. So this here is one of my old charts from TradingView. Where I used this logarithmic regression channel to predict 100K by mid-2022. And if we click play, it kind of played out, but not as I expected, of course. It went differently than I thought. But you see, this stuff is already very old, and the first logarithmic regression models go way back, even when I started with Bitcoin. As I said, they were circulating around, and now it is almost, but not quite, I would say, common knowledge. Now, what is a logarithmic regression channel? Well, it's a function, right? We say that the y-axis in this channel here is in logarithmic mode. So y is a parameter a times the decadical logarithm of the time plus a parameter b, right? So this is the function here that we have, and you can now vary the parameters a and b, right? These are the two parameters, the so-called fitting parameters that you can vary, and based upon how you vary them, you will of course now get different inclinations of the slope, and therefore the channel will look differently, right? You can play around with different fitting parameters, and that is also the reason why the logarithmic regression trend channels of different people look different. It depends, of course, on the parameters. So this is basically the function with which we plot this logarithmic regression trend line, right? It's not magic. And of course, you can also change the decadical logarithm. So decadical means, of course, to the basis of 10, right? You can of course use the natural logarithm ln, right? Which is to the basis of Euler's number 2.71 and so on and so forth to the power of x, right? Euler's number. So you can experiment around, of course, with different types of fitting parameters and different types of logarithms, and then you will find that there are some nice trend channels arising which you can plot on TradingView. You can make your own scripts. You know, I have here my script. I can modify the parameter as wanted. I can play around with the parameters. So some people, for example, they like to fit this here more conservatively, and they say that this here was a legitimate top, right, for example. And then of course you will have a slope that is not as steep, which looks more like this, right? And then of course the future prices are consequently lower. Now I personally don't like that so much. Why? Because I think that this thing should have had a blow off top, which it didn't have, because now more institutional investors are in the market. So we should have gotten a blow off top, which we didn't get. But that is not a guarantee that in the future we won't get a blow off top. Just because it didn't happen that once, doesn't mean that we will never get blow-off tops, because remember, friends, the Nasdaq and stock markets, there are many institutional investors in there, and if we look at what happened the last times, right? And I think the Nasdaq is a pretty good proof that we can get blow-off tops even if there are large institutional investors in the market, and this might have been a blow-off top, we don't know yet. Could make another leg up, which I personally think is quite possible due to the reasons that I explained in the last two videos. But you see, blow-off tops are still possible, as stocks show us time and time again. So, you know, I think just because this once a blow-off top didn't happen, I'm not so sure that it will never happen again. We can maybe in the next rally get a blow-off top, right? It's not to say that it will never happen again. So I personally don't count this last rally so much. Therefore, my personal logarithmic regression channel looks a bit more optimistic long term. So the inclination that some others use, which is then lower because they count this here more, is of course then not the case for me here. So this means that my model is long term a bit more optimistic, but of course the difference is not insanely huge, right? So now that we have understood the logarithmic regression trend channel, let us understand where it comes from. Like, why does Bitcoin grow this way? Like, why isn't it not growing another way? Why isn't it in the logarithmic axis a linear function? Or why isn't it like this? Or why isn't it like this, right? Well, for that we have to go a bit into Metcalfe's law, friends, and fortunately there's a very good article on Wikipedia about Metcalfe's law. So in principle it says that Bitcoin, I mean, you know that Bitcoin is a decentralized ledger. It's basically a decentralized way to store and send monetary units, right? And of course, the value of a network increases with the more number of people that use the network. That makes sense, right? If you have a social network, for example, that only 5 people use, it's clear that it's not worth as much as a network that is being used by 5 million or 5 billion people, of course, right? So the way it's being explained here on Wikipedia is like how you can visualize it, like 2 telephones. Of course, there's only one possible connection. With 5 telephones, you can already make 10 connections, and with 10 telephones, you can make 66 connections. So this thing here seems to be rising, not with the power of n, with n being the number of users or telephones or Bitcoin users in our case, but it seems to be rising faster. And the law which is being found is that it's proportional to n times n minus 1 divided by 2, which then for high numbers converges towards n squared, okay? So this means that the value of the network V is proportional to the number of users squared for n goes towards infinity. So if n is a very big number, then of course the value of the network becomes proportional to n squared. And for lower numbers, we said it is proportional to n times n minus 1 divided by 2, okay? So that is important. The value of a social network is proportional to the number of users squared. And since we now have a lot of users, we can use that approximation. Now, why is that important for Bitcoin? Well, because in Bitcoin, we can estimate the number of people that use Bitcoin with the unique addresses used. This is a very important metric. We find it on blockchain.com and many other sites that track Bitcoin on-chain data. And we see that the number of unique addresses is rising in this fascinating way. It was very steep in the beginning. Okay, if we neglect this, this was before Bitcoin was publicly available. This was when Bitcoin was still being tested by Satoshi and a few other people in private wallets. But if we start from the time when Bitcoin was actually traded, I think this is from 2010 onwards, then we see that there's really this nice function that is very similar to our logarithmic regression channel. So the logarithmic regression channel is just a consequence of the number of people that are actually using Bitcoin, which can be derived, of course, by the number of unique addresses used. But we said n squared. So this means that the value here is getting higher. We see that the slope is not as steep anymore. It's quite shallow now already, but we said it's n squared. So this, of course, then makes these large values here have more weight than these lower values. So if you would plot this, if you say the number of addresses used, if we just go to the linear scale, currently is sitting at 663,000, you would have to square this number, of course, to then get the Metcalfe value, right? And if you would do this, if you would plot this here n squared, then you would get a plot that looks absolutely like this here, you know? So this is the reason why Bitcoin is behaving the way it does, because Bitcoin is nothing else than a decentralized network, and each unique user can send money to any other user. So if we have 660,000 unique addresses, one user can send money to 659,999 other addresses, and every other user can do the same. So therefore it's proportional to n squared. Now we have understood why Bitcoin behaves this way, right? This is quite fascinating, and as I said, I think this is the best model we currently have. Metcalfe's law and the logarithmic regression channel arising as a direct consequence of Metcalfe's law, which in turn is just a network price theory, okay? It tells how a valuation arises from the number of users that are using a decentralized network. So all fine and well now. So we zoom in here. I've plotted this chart. The upper band is where it gets into bubble territory, right? Here, here, here. It was respected quite nicely by this upper resistance line. Then we have a yellow line, which I would say could be interpreted as the median value, and it often was at median value. Many times it was at median value, right? And the green line represents buying opportunities. When Bitcoin price reaches this level, it is always an amazing buy opportunity. So we want, of course, now to know, when will Bitcoin reach $1 million per Bitcoin, right? When will it reach $1 million per Bitcoin? Now, we don't know exactly how the price will behave until then. We can just observe two things. First thing, the slope, the inclination is getting less inclined. So it's getting flatter and flatter and flatter until in the very far future, Bitcoin will not rise by much anymore, right? That also makes kind of sense. The second thing that makes sense is that the variation here, which means the volatility, is also decreasing, right? If we look here at the volatility, the maximum volatility, I have plotted it now until 2031. So the maximum price in 2031 is 7.8 million and the minimum price is 1.37 million, okay? So the variation is about a factor of 5. But for example, in 2013, in late 2013, the variation, the lowest price possible was an incredibly low 35 and the highest possible was 1,100. So this is like a factor of 35 or almost 40 difference. So the variation was almost a factor of 10 higher in 2013 than it will be in 2031. The variation today, we have a maximum top of 184,000 and the lowest possible price at 14,000. So the variation is a bit more than 10. So we see it makes sense. The variation decreases. Why? Because long term, the volatility, of course, must also decrease because Bitcoin grows and grows and grows. You could think of it like a pendulum that has more and more mass, and therefore the inertia is growing, and it gets harder and harder to change its direction and change its course. That's how we can imagine this. So the earliest time where Bitcoin would reach a value of $1 million is if we go by this red resistance line here of the trend channel and we just follow it, and the first time it actually hits $1 million is in April 2026. Okay, let's remember this. April 2026 is the first time we hit $1 million. And when is the latest time that we can hit $1 million? Well, the latest time is of course given by this green line here, so the most pessimistic value. And this is then, fascinatingly, in September 2030. So between April 2026 and September 2030 is the time where Bitcoin will reach $1 million. So there you have it. Of course, we do not know how exactly this will play out. Will Bitcoin now go down again to the lower trend channel, and then we get a rally in the next cycle when the halving comes in 2024, and then we get a cycle afterwards, and then it will hit 1 million here in 2029? Or will Bitcoin now, as I have said in a few videos, that it could be that we get an unexpected rally right now and then we go down again, and then the next cycle, you know, comes in 2027 or 28, then we could see $1 million, of course, already earlier in 2027. So you see, the earliest date I think is unrealistic because it seems quite early, 2026 for $1 million. That's only 4 years away. And 2030 seems a bit pessimistic. So let's take the median value. So in the year 2028, it could be possible that we see Bitcoin at $1 million. So I hope you found this interesting to think about this long-term Bitcoin trend channel, the implications of it, where it comes from, and what it means for the future price appreciation of Bitcoin. If you found this video interesting, I would of course be happy if you leave a like and maybe even subscribe to this channel. I will make many update videos on Bitcoin, on altcoins, on the macroeconomics of Bitcoin, looking at Bitcoin long-term price predictions and also shorter-term predictions. Everything you can imagine surrounding Bitcoin and crypto, I will discuss on this channel on a daily basis, except if I have 40 degrees Celsius of fever, then I will probably not do anything, but I hope this won't happen again anytime soon, friends. So then I would say have a nice day and see you in the next video. Bye, friends.